Uncensored live Q&A session. My name is Danny and I will give you the webinar today. And we are going to begin as we saw in the agenda with the previous questions. Okay, so the first question that we have is, what is AvaProtect? So let's quickly get ourselves a notepad for that to write down the notes. And we will simply copy the question and paste it up here. And then we're going to switch to the chart. This is the web trader. To access the web trader, all we got to do is just to log in with the email and password. We don't need to install or to download or install anything. All right, so what is AvaProtect? I'm going to go ahead and say that AvaProtect is only applicable for Forex, gold, and silver at the moment. And the way that it works is, if we'll stay with, let's go with maybe gold. Okay, so I'm going to select gold, type here gold, select from the list, click here on the two arrows to make it all the way up. Clicking here on the arrow and then clear drawing if I had any things. And then I'm going to click on the column price, click and drag down. Then I'm going to click either sell or buy to open the order entry, as you can see. And underneath, I see here a golden shield. And if I'll point on the eye, it says here, once the protected period is over, AvaTrade will reimburse you with the cash to your account if the position is losing, whether the trade remains open or closed. Demo accounts can use AvaProtect for a limited number of orders. Now, what this means in simple words is that AvaProtect is allowing us to protect the position for a certain time frame, which we're going to see. Okay, whatever we lost during that coverage will be returned. Yeah. And one more thing is that there is a fee when using the service. There is a fee when we are using the service. Now, what kind of time frame and what kind of fee and what kind of protection? Why would we need to protect the position from what? Okay, so I'm going to answer all of those questions, but first let's write down gold, and then we'll hypothetically put an entry just to explain the scenario here. Take profit and stop loss, just again to understand a little bit what's going on here. The take profit, let's make it a flat 4,000 seems good to me, so I'm going to go with a flat 4, and then maybe 3960 will be my my stop loss. I'm going to enable execute when, oh sorry, I cannot do this. First I'm going to click on AvaTrade, and then I'm going to enable take profit and stop loss, just so we will see the possible profit and loss. Now, why have I done this? As you can see, there is a fee here when I'm using the service, okay? And the fee is according to several, let's flatten that to be 0.01, okay? And the fee is changing according to 2 things. 1 is the size of my position, and 2 is the length of the coverage. We can see that we can choose a length between 1 hour. If I'll click here on the plus, just watch what's happening with the fee. I click here on the plus, it increases, again. This is the max that I can choose. That's 2 days. Now it's already $43.36. And if I'll increase the lot size to, let's say, 0.1, that's going to multiply as well. Okay, now why did I bother to write those values down? Because now I can compare my take profit and stop loss. Maybe we should also draw just a green rectangle and a reg rectangle for the profit and loss, so it will be easier to understand. And then we're going to choose the current is 3900, and then the stop loss is going to be this, so we're going to make it red. Oh, I think let's change to days real quick. There we are. And then place those price lines first. Okay, go 3960. Okay, I think we can go lower than that. We can go lower than that to, let's go $50 down. $50 down seems reasonable. So I'm gonna make it, if our entry is 3975, that's gonna be 3925. That's gonna be $50 down. And in here, we'll place our loss area. Just gonna make it a bit smaller like that. And our take profit can be $50 is 4,025. Let's do it with a calculator. Okay, so 3975 plus 50. Okay, and why the stop loss? Oh, this needs to be, there we go. Now, why did I make this adjustment while I'm explaining about AvaProtect? Because I'm paying a certain fee to protect my position to get back my losses, right? That's the idea here. This is what we read in the beginning. This is also what I wrote down for you on the notepad. Just a second, just a few more moments. The reason that I'm doing it for you guys is that you will be able to use this product efficiently, because to use it, you saw, you just ticked the box, I selected whatever values I've got. It's pretty amazing. But what I also want to do is to compare the fee that I'm about to pay with my results. Otherwise, I might end up, if I wouldn't make this adjustment, even now, by the way, it's not the best comparison here. Why? Because we're about to make $460 at this current scenario, but we're going to pay a fee of $430. Okay, and the loss, well, okay, and we're going to pay this. So if we will lose this much, if it gets to the stop loss, so we will get that back, but we'll need to pay 433. So this is for 2 days. Now watch what happens if I'll minimize the range for, let's say, 1 day. Okay, we're getting somewhere. Now we've got $200 difference for the possible loss and the possible profit. So in this scenario, in theory, we're just going to quickly adjust it, and we will adjust it to the numbers we said. Oh, sorry. Okay, and something here still doesn't quite. Oh, okay. Now, when I compare those numbers, my ambition is always that the fee will be as low as possible, and that the efficient and the I want the fee to be as low as possible and the possible loss to be not as big as possible, but I wanted to justify the fee. I want to pay a fee that will leave me profits. Okay, if I'll take even a higher price as an example, so if I'll extend it by 100, you're gonna see that this comparison looks much better, right? If I can make 1,400, but I'm gonna pay a fee of 300, I'm gonna be left with 1,000. That's amazing. Okay, now in here as well, if I'll reduce this by 100, and God forbid it gets to that level, it's approximately here, 3825. Yeah, so if it gets down there, and there is no guarantee that this will happen, but if God forbid it does, I'm gonna get back $1,500 if it happens within the period of the coverage, and I'll only have to pay 300 for that. So this is something I'm happy to do. Okay, I'm happy to pay 300 if I'll get back 1,500. Okay, what is the R&R negative to risk 50, 560 to win? Exactly, 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 exactly. Exactly. So what we're trying to achieve here, is a comparison where we pay a certain fee, but our result will justify that fee. Okay. So for instance, if I would go like this, and God forbid my initial take profit was here, my initial stop loss was here, and that's terrible. That's terrible because I'm paying a fee bigger than my profit and loss. So what's the point using the product at all? Yeah. So do make this comparison. Take the extra few minutes to just align the values so it would make sense, and you won't, God forbid, end up fee paying than your results. Okay. And like I said, or like I wrote in the beginning, unfortunately, AvaProtect is available for Forex, gold, and silver, nothing else at the moment. And as an addition, we saw that the fee is changing based on two factors. One factor is the size of the position. The second factor is the length of the coverage, which we can see here when the expiry is going to occur. One more thing, it is my responsibility if, for instance, I wouldn't use, I think we have a question about that, right? Can I succeed in trading? Okay, so we're going to answer this question next. So this is a great example. What if I wouldn't use none of those, and the market just goes? Okay, of course, same thing. If it goes higher, I'll make profits. If it gets lower, I'll have losses. But I'm only going to get the losses back during that coverage. So if I'll keep the position open for a week or any time beyond the coverage, I'm not going to get the remaining funds back to my the remaining losses back to my account. All right, this is regarding AvaProtect. If there are any questions, feel free to share with me, guys. I'm also gonna paste what we wrote here. Oh, one more thing to say, just a quick one. Once I have finished the, just a second, once the coverage is done, I cannot extend the coverage for more. So this means if I select the 2 days, and now at the end of those 2 days, I want to have another day or 2 days, I'm not going to be able to. I need to choose in advance what I want, and this is what I get. If I want to cover another position, I can, but I cannot extend an existing one. The second question here is, okay, so can I succeed in trading without using pending orders? The answer is absolutely yes. For people, as an example, that trading scalping, right? Scalping is fast-paced trading. I'm gonna probably analyze minutes, 5, 10, or 15 minutes to do scalping. The way that it works is very simple. So for instance, if I'll stay with gold and I'll just change the time frame for 15 minutes time frame, we can see that there are certain opportunities in this chart, and we can see that they are based on those fluctuations, which there we go, which happened since the beginning of the day. All of that is just the beginning of today's session. Now this means, and obviously each candle here represents 15 minutes. So at the moment I see like gold is becoming, I still don't know actually, but let's suppose that it keeps, you know, it keep going up. Okay, it doesn't seem like it. It seems like it's going down. So maybe at this point I would take a sell. If it gets to that level here, maybe I'll close, and then if it turns around, I'll open it again. Okay, so scalping is fast-paced trading. I need to make the decision right here, right now, and I need to also ensure to be, if I'm not using any pending orders, I need to be by the chart and monitor the position to I cannot, without pending orders, I'm not going to leave the chart without, there is a question here. Can you also explain the signals from AvaTrade? Yes, of course. Of course, I'll paste this question. Thank you, Andra, for the question. So we're going to take the question. We're going to paste it right here. I'm going to get to it very, very soon. Send Andra. Of course. Okay. Now, that looks good. So how do we succeed? How can we succeed if we are not using pending orders? How can we succeed? So like I've explained, if I'm not using pending orders, what is the purpose of pending orders? Pending orders allowing us to automate our entry and closing by designing a price that will be triggered on the chart automatically. Now, what this means in terms of in practice, it means, for instance, if I open gold like this, okay, and let's suppose I'm not going to use neither take profit or stop loss. Just, we are in 15 minutes. Let's quickly change today's. Okay, and let's suppose that we're going to keep it at the moment. We're going to keep it, we're going to open a buy, and let's suppose that this will be, we are with a buy, so that's going to go red. Now, let's suppose that I'm not using any pending orders, just gonna go here and click here buy, let's suppose. So as long as gold going up, I'm gonna keep making profits. When it turns around, I'm gonna start losing. So without pending orders on the chart, as soon as I leave the chart, just let me show you how frequent the trend is changing. So we switch to 1 hour now instead of 1 day. Just look how every hour almost is looking different than the previous. Okay, we do have some continuous here and here and here, but almost every hour is different than the previous. So how can what can be done in this case? If we're not planning to use pending orders, we don't have any pending orders, and the position keep floating. Okay, let's suppose that we are with a buy. If it keeps going higher, I'm not going to be bothered because I can close it at any point. Okay, but once it's turned around, let's suppose like this, it goes, you see, if I would open my position here, it goes out, all the way up here. Now my take profit can be in here, okay, somewhere in here. If I haven't placed any take profit, look what happened in here, and then it goes down. Okay, so this is also a possibility. One possibility is that it will go higher. Another possibility, it will go down. Another additional possibility is to go up or down after the second movement. So it means that in trading, we don't always see only up or down, right? We see up and down, or maybe do it without to confuse anyone. So going up and down, it also could have been down and up. And if we look at the farther time frame, the larger scope, gold did go up, and not only that it went up. I'm gonna switch to month real quick. Okay, so if I want to compare the percentage from last year till today, that's gonna be an incredible 136%, guys. You realize what I'm showing you here. Now, if I'll stretch it even farther, that's just incredible. That's just incredible. Well, this is probably the lowest before. This is already 5 years ago, so I'm not gonna, you know, it's less relevant for us at the moment, but still we get here an insane percentage, right? So hypothetically, if I would open a position without the close, this is regardless the swap, guys. I'm not gonna talk about the swap here at all. This is 2 years to hold a position, but still just to capture what's going on here. So 106. Let's actually let the platform do this for us, right? So let's go execute when price hits, and let's say 1 lot, just as an example. Yeah. So the reason advantage to not using pending orders, because pending orders allows us to do what I wrote here, but it also it's limiting us. And in professional language, in MT4 and MT5, this also is going to be a limit. It's going to be a buy limit or a sell limit, okay? And it limits my possible profit and loss. From the other end, as we can see, if hypothetically I would be lucky enough to open the position here and I would hold it without any take profit, just look how far up it could go. But we should remember it could have been the other way around. Okay, this could have been the other way around. So there are pros and cons, like everything's in life. So if we use pending orders, we do get to enjoy this automated pending orders. If we don't place pending orders, then we're not limited, but we're not limited to the profits and we're not limited to the loss. Okay, I hope that it makes sense. If there are any questions regarding what I've explained just now, feel free to let me know. Is a question from Freddie. I don't understand what you did with gold. Okay, Freddie, I'm going to explain to you what I did with gold. So the comparison I did here was to show, let's see what the question is asking. Can I succeed in trading without using pending orders? So I wrote here a simple explanation. Pending orders are allowing us to automate an entry and closing by designing a price that will be triggered on the chart automatically. So I took gold, and since gold increased considerably by 170% in the past 2 days, from an insane 1670 to 4383, so I simulated a scenario where if I would hold a position without take profit, just to let it float, and just look how far it gotten, right, in the 2 years. So I could make, just look how much I could make with a single lot. That's just insane, right? With a cost margin of less than 20,000. That's incredible. But again, this could have happened the other way around. So, like I said, this could be an advantage or disadvantage. Does this make sense, Freddie? If it doesn't, feel free to ask. Now, if I think this is enough for the question. Like I said, if there will be anything else that you guys would like to share with me, feel free to do that. But for now, we will just carry on. How can I have multiple charts? So this is, I'm not even going to paste the question here because it's very simple. I'm just going to show it to you in a second. Clicking here on I don't even have to do this. I'm just going to click here on the X. You see that in the middle of your toolbar, right at the top. I can click here on the icon. This is third to the right and maybe third to the left. Let's see, 1, 2, 3, 4th. Okay, somewhere in the middle. So I'm going to click it. Then I can split the chart to have 2 charts, one next to each other, or one on top of each other, or maybe even 3 like this, or 4. Is that as much as I want? But they are all gold. So let's change them. Let's suppose that I want to see at the bottom here, I want to see wheat as an example. So I'm going to search, select it from the list. Then I'm going to click another one. You see that there is a blue rectangle all around the chart. It means that it's selected. So in here, we're going to place NASDAQ as an example. Click it from here. And then here at the bottom, lastly, we're going to have, let's go NVIDIA, even though it's closed, but okay. Now I can analyze all of those simultaneously. Here's another question here. How can I set the price, for an example, from $1 to $1? I'm not sure that I understand your question, unfortunately, Andra. If you can please elaborate, this will be amazing. Now, what if, for instance, let's suppose I want to go with gold. I click here, buy or sell, and I want to switch to NASDAQ. I want to trade NASDAQ now. While I'm at it, while I'm with this layout. So what I need to do is I need to click on NASDAQ, and then again I need to click on buy or sell to open the order entry with it. Okay, pay attention to this, because if I'll click here on something else like NVIDIA, I'm still with NASDAQ. Okay, so to switch to NVIDIA, I'm going to click buy or sell again to display the correct order entry, and then I can carry on with ease. Although, like I said, it's only going to open in an hour. Okay, so we didn't paste the question. Okay, let's how do we do this? Just a second. On the web trader, in the middle of the tool bar at the top above the chart, there is a multiple chart change icon. All right, and like I said, there is the recording of this webinar, guys. Even if you didn't understand, you could just watch the recording very easily. What is the typical? Okay, so the question is the chart price, for example, is from 1K to 1K on the right. Where you see the price, where I see the price, you mean here? You mean here? Let me change to 1. Okay, in here, on gold. If I want to change, you see now with 0.01, okay? If I'll click here on the take profit and I'll extend it by 100, okay, as an example, what happens is we're gonna make 100. Yeah, so this is for every dollar, for every ounce, we're gonna make $1. Okay, if this would have been 2, we would make 200. Oh, sorry. Okay, on the chart. On the chart. Then I don't understand. Unfortunately, I don't understand. You can elaborate. This will be amazing. The chart price is 1-to-1. Unfortunately, I don't understand. So the last question here is, what is the typical structure of trading session? So we're going to take the question, paste it right here, and the typical structure. First of all, I'm not sure that there will be But what is the 1K that you see? If you can tell me, what is the 1K that you see? Where is located? What is your reference to 1K? Now, what is the typical? So for a trading session, so the first thing we do is, obviously, as soon as we log into the account, we're just going to randomly select here anything that we want, maybe Forex, maybe majors, and maybe Aussie USD. Just click here, buy, expand the arrows, and then hit here the buy button. God forbid, I mean, I can do this. There is nothing that forbids me to do this, but it's not a typical structure of of a trading session. The first thing that I want to do is, of course, I do, if I have any existing position, so what I do is I analyze. There is another question here. Look at the chart. You have 2,000 and 3,000. Oh, you mean the price? Maybe you mean the price? The price, the column price? Ah, the column price. Okay, I think I understand that. Just a second. Let's try. The column price, to move it up and down, you need to click and drag. Click and drag. If this is what you meant, so this is how you do it. You need to click and drag, and then it goes up and down. You can also change the time frames so it would make sense to what you are looking for. Okay, you must click and drag. This enables the feature. Now I think I understand what you asked. So what is the typical structure of a, so the first thing is analyze previous positions or existing positions. Yes, the price. I meant the price. Looking at the price. This is the price. This is also the price. Okay, so what I would do if I have any existing positions is to analyze my existing positions, because I want to know if I'm making profits and loss and to act accordingly. The second thing that I want to do is I want to prioritize, right? I've got this many instruments with so many categories and so many things to select from, okay? So I'm not going to just randomly pick one. I'm going to analyze several instruments. The way that, just a second, okay? So first of all, like I said, I'm going to analyze the previous positions, and if at the moment I'm looking at in here and I don't have anything specific that I would like to trade, is probably I will place some instruments that I find interesting, the same way that we did in here, maybe a different layout with multiple charts, whatever I want, or one by one. But at the end of the day, I will do some rough selection, right? So rough selection. Rough selection, what to analyze. There is no way that in every session I'm going to analyze so many instruments. Okay, I want to analyze what I want to analyze. So analyze existing positions if we would have any. Rough selection, what to analyze. Then we've got the, let's call it just again rough analysis in terms of support and resistance. So how do we call it? Again, let's say basic analysis. Let's go basic technical analysis. Okay, and then after I did some basic analysis, I'm going to select the actual instrument that I'm going to trade. So trade. Once I've done that, and I've got the instrument, and I've got the the basic analysis. Let's take gold as an example. Maybe Nasdaq as an example. Clicking here on the two arrows. And now I know that Nasdaq is what I'm going to trade. Just a second. Okay, and I have done, and I went through all the stages. I analyzed the existing positions. I did rough selection what I want to analyze. Nasdaq was one of them. Basic technical analysis. So let's play some lines. Just a second. Of course, everyone can have their own rules of analysis of their own trading sessions, but I'm using very basic things at the moment just to understand what's going on here. Now, after I've done that, and I understood that the general trend is bullish, and I think 3 weeks going up is enough for me to take a buy, and I'm ready to take the buy, then what I'm going to do is I'm going to go and make a quick margin comparison. Okay, and with this, what is the margin usage comparison? So as you can see in my at the top right, at the top left corner of the order entry, there is margin impact. Margin impact is the necessary amount that I need to have available to open the position. Now, why do I do this margin usage comparison? Because first of all, I need this amount to be available. If it's not available, I'm not going to open the position. So what's the point bothering and doing fundamental and all of that if I won't have enough to open the position? Maybe I will add more funds. But at the current situation, when I'm in my trading session, if I don't have enough, then I don't have enough. Either I'll add more or I'll carry on and select another instrument. So this margin usage comparison is here to help me understand if I do have enough, and if I do have enough, should I do it or not? For instance, we are with 10K. Let's suppose that I want to trade 0.07. How much is this out of my balance? 90%. This is 90% of my, not my balance, my margin, God forbid. So yeah, so this is a comparison I need to make to ensure that I have enough margin and it harmonizes with the rest of my positions. So I won't end up not having enough to execute my strategy. But let's suppose that we do. Let's suppose that we do have enough and we do have nothing else open, okay? So we did this margin comparison. We see that the margin looks fine. We have enough margin. We can open the position and we feel safe. Adding fundamentals. Okay, and then we've got last analysis and then execution. Now, why did I add those last two things? Because it's quite, you might think, okay, well, you did a margin comparison, you added the fundamentals, you went and checked why NASDAQ is so high. Maybe it's related to the economy's, US economy situation. Of course it does. Okay, and you can just click here buy. So what's this last analysis and execution? Well, as we know in trading, there are things called ripples, right? There is immediate, there is an immediate effect, and there is a long-term effect. So if, for instance, there was an interest rate decision, let's suppose that there was an interest rate decision, not the decision, but the forecast, okay? There is the decision, that there is the forecast. So let's suppose that there is a forecast that makes the market move this way or another, and then there is Powell, and then there is the decision. So we've got the forecast, we've got the decision, but until this point in between, the market can fluctuate. So we've got the immediate, like I said, the immediate ripples, the immediate fluctuations, and we've got long-term fluctuations. So after the decision, we can see the result. As we can see, even NASDAQ, even though, again, if we would compare it with gold, which we compared with, that gold went 170%, right, in the past 2 years. But how much NASDAQ? Okay. We're not looking at, actually the numbers are not too far away, to be honest. It's 150, well, 20%, quite significant, but never mind. The point here is to show you guys, the reason of what I wrote. So last analysis is to give the market a little bit of time. We are just contemplating and see that it's suitable for what we analyzed and the news and everything, and then we can click here buy and execute. This whole process can take, to my personal opinion, between half an hour to an hour, no more than that. It depends on how many instruments. Of course, if I'm trading 20 instruments in a single trading session, this could take me hours. But if I'm trading only 1, 2, or 3, or reasonable amount, so I would say half an hour to an hour should do the job. especially if I'm working with a dedicated plan. I'm going to add here a bonus. Okay, if I am working with a plan, each step of the way will be according to my plan. Okay, this means if my plan is to make such an amount, to expose myself to such an exposure, if I have those guidelines, I don't even need to think too much, because I'm going to analyze the existing position based on the plan. The rough analysis I'm going to select will be based on the plan. I'm going to also select the instruments based on the plan, based on what I did good or didn't do good, and also the margin comparison. Everything is much easier with the plan, because we've got written guidelines. We don't have to reinvent ourselves every time we trade. So I would recommend, highly recommend everyone to work with the plan, and we can easily help with the plan. A senior account manager is there to answer any kind of trading questions you've got. I don't think what I did now, maybe I should just minimize it all at once. There we go. Well, maybe now. I wanted to keep it as a list, but seems like it's taking a little bit of time, but we're almost done. Okay. Right. Now, the questions that we've got, okay, so we've only got one question. Can you explain about the signals? Very easily. We're going to go through the signals. Let's select the next slide. Click here on the thingy to fold it down. And then we're going to go to the signals, clicking here on the two arrows, folding that down, clicking here on the arrow to clean the drawing. And then I'm going to hover onto the signals, which is located in the middle of the toolbar to the left. Now, if I'll click on the signals, as we see, the way that it's built is very simple. We've got different categories in here. We've got the name of the signal, of the instrument, of the symbol, the type, if it's buy or sell, stop loss, entry price, and take profit, and then the view signal, and then when the signal was initially was analyzed. It's important to know that the signals are not manufactured by AvaTrade. They are provided to us by the Trading Central, which is a third-party vendor. The way that we can use the signals are super simple. We're just going to click here on the view signal as an example. We're going to click here on the two arrows to expand the chart all the way up. And then we can simply choose a scenario, buy or sell. Let's go with a buy. And we are pretty much good to go. That's it. I haven't placed any of the values that we see here. Everything happened automatically just by me clicking on the view signal. So I'm going to do it again with maybe oil. This time clicking on view signal, clicking on the arrows, clicking on the sell. And again, I'm good to go. I can make any modifications that I want. If I'm not satisfied with the values that I have, I can even change the lot size to something else. And as you can see, super straightforward. Really not complicated at all. But as I always say, I would recommend to have a little bit of knowledge, even though we're using signals here, which are the take profit and the stop loss we saw. But still, to make the proper judgment, I would recommend to have a little bit of background and understanding how trading works. Lastly, we're going to look at the links we've got in here. We're going to send it to you over the chat to save you the time to find it by yourselves on the website. So the first link is for additional education. It's going to be the AvaTrade's education. Second link is for the FAQ in the Help Center. We've got here a link for a real account if you're still with a demo. And lastly, the Academy, which, as I promised, I'm going to also show how to get there from the website. So when we are here at the default screen, this is the default screen. To get to the Academy, we see here at the bottom almost at the bottom, just above the bottom, the last icon, we've got here education. And then if I'll click here on Academy, it's going to take me to the Academy. And if I'll click here on tutorials, it's going to open the tutorials. And it's going to show here all kind of, this is the platform review. We can scroll down, trading basics, scrolling down, stocks market fundamentals, scrolling down, Forex. Anyway, there are so many things here, all kind of useful things here for you to use. Just look how convenient that thing is. If I'll click here on the play, we get right here without even leaving the website. We're gonna get a video in a moment. Let's try another one, maybe needs a little bit of encouragement. We'll click here on play. And right away we got it with translation and sound and everything, and we can just educate ourselves in a matter of seconds. So of course, I would recommend you guys to try. It's very useful. And before we say goodbye, I'm also gonna give you the nice one-on-one premium market review, the Q&A benefit, you can give to your senior account manager to get a one-on-one premium market review. Now, unfortunately for today, our time is up. I do appreciate everyone who's joining us today. I do hope that our session today was helpful to help you make progress and something that you can implement in your strategy. So you're all welcome to join us next week. Until then, best of luck with trading, have a fruitful week, and have a good day.